Welcome to this channel, traders. Yesterday I shared a strategy for gold, but I didn't say much about the entry rules, and I want to focus on that today. Okay, so remember the strategy, your focus is on the Tokyo session and the London session. What you do is you observe first what is happening on the region where London overlaps with Tokyo, and what you watch out for is the first key level. Okay, a key level is just, I can say, it's the first V which price is going to make within this region right here where the sessions overlap. So the first V which price is going to make, you identify it. What we see right here, price came down and then pulled up, giving us this first key level. Okay, now what we know, what I know based on the backtesting is that when price comes out of Tokyo and gets into London alone, what it will do is close this gap. Okay, it will come and retest this key level that you have drawn. That is the strategy. That is the strategy. So for the entry rules, traders, the first comment that I wanted to make is that please don't wait for price. Okay, remember when price comes out here, you are going to sell right there because you know that price is going to drop and fill the gap. But remember that it is not always that price will come and touch this key level. Sometimes it will return just there. Okay, so please, for your take profit, make sure that it is somewhat just above this key level. Another thing, traders, I know that some traders like to enter multiple trades. When you place the trades there, don't go in with trades that are more than 5. Okay, you can place 2 trades or 3 trades, but don't put a lot of trades. What you can do is that, because price, it's not always that price will just drop to fill that key level. Okay, let me put the key level back. It's not always that price will just drop to fill that key level. Sometimes price will start by maybe moving up a bit before it can come and fill the gap. So what you can do is, if price pulls against you, let's say 5 pips, you can add 2 more trades. Okay, 5 more pips above, you can add 3 more trades, because eventually you will see price dropping to fill that gap. Okay, maybe we can check for a scenario where that happened. What happened right here, price came down and then pulled up, giving us that first key level. Okay, that was the first key level which price made. Okay, so when price came out, it dropped to fill that gap. Okay, it didn't happen that much. Okay, even here it didn't happen. That was the first key level, the first V when price came out. Okay, notice that price came out of the Tokyo session from there. That is where price came out. That is where you would have placed your first sell trade. Okay, but then price pulled up. Okay, that's where you could have added maybe 3 more trades and then price dropped to fill the gap. Okay, so that's what you can do. Don't put a lot of trades at first. Don't put a lot of trade at first. Let's take this as the last example. What happened here, price came up and then down, giving us that first key level. So when price came out from there, okay, here it didn't happen, price just went up to fill the gap. Okay, just don't start with a lot of trades, traders. Remember, gold has a bigger average true range. A small move in gold can wipe out your account, so please be careful. In fact, if your account size is less than $100 or $50, it would be wise to start out on a cent account. Just put your money on a cent account. Here's the other thing I want to talk about. If you are trading a funded account, okay, let us say this is 3,000, 3K, what a nice 3. This is a 3,000 funded account. If you are to trade any of the strategies that I've given you, if you are trading a funded account, remember traders to focus on the overall drawdown. In fact, you have the overall drawdown, which is 9%, and then you also have the daily drawdown, which is 6%. Okay, which is 6%. 6% of 3,000 is, let's say, 180. It's 180. So what you have to focus on is this 6%, because what you have is not really the 3,000. It is the 6%, the 180. This 3,000 is just your leverage, which most of the time the prop firms use it to blow your account. Because what you will have in mind, you will put your focus on the 3,000 account, and then you start using a lot size that is maybe in line with the 3,000. Let's say you put lot size 0.4, okay, or lot size 0.3, thinking that you have 3,000, when actually you are controlled by this 6%, which is the 180. And 0.4 is quite big for 180. What you can use maybe is 0.0 something, okay, maybe 0.04 at most, or 0.03. That is what you can use for a account balance of 180. So please focus much on this balance that you really have, because should you blow the 180, you have lost everything. Even this maximum drawdown, once you lose 180, all you have is 3%. And then you are going to come again with lot size 0.4, thinking that you still have 3,000, when in reality you have the 3% and you just blow. So please traders, wise up, focus on this daily drawdown. I hope that makes sense. Maybe I can make a fresh video on that, but please try to follow on that. Now for those, maybe I can end with that. If you already know how to set up this indicator, thank you so much for watching this video. But if you do not know, this is this indicator. You come here to indicators. I'm on TradingView using a free account. It's a free indicator. Just type in sessions and then select that one, sessions. This is what you are going to see. All you have to do is go to the settings of the indicator, scroll down and check that box down there, and then you can uncheck the sessions that are not necessary for this strategy. Uncheck New York, uncheck Sydney, and then press OK. You are done. Okay, thank you so much for watching this video, traders. Wishing you the best on the coming week.